So let's bring in our next guest. That's going to be Christopher P. Davis, partner at Hudson Value Partners. Welcome to the show, Christopher.
Thank you for having me this morning, Tom.
All right, so we're talking tech today. NASDAQ 100 hitting fresh all-time highs yesterday, and that's even without maybe participation in the Mag 7. Apple hit an all-time high yesterday, but we've seen a pullback in this area. What's your take here? Is tech going to lead us to that next? Because the rally's broadened out, Christopher. We know that, right? Equal weights up. Russell hit all-time highs last week. But is this the next step to take us up to more gains here for the end of the year where, big tech's going to be back to being the leader here?
Well, as a value investor, it's always music to my ears when the market broadens out.
Yeah.
But I do see it as hard for the overall market, and particularly the way indexes are constructed, for them to move meaningfully higher without technology. And, your last guest was talking about the reindustrialization of America. Well, the America's biggest and best export is technology. And I think that's still going to be a dominant sector for the U.S. and a dominant sector for the market. And I think it's just important to pick your spots there and realize that there are some real valuation dispersions out there, and make some picks that are going to be a little bit more attractively valued, but still on theme.
Yeah, you know what? The entire market rally was led by a lot of the big tech, but we've seen some pullback in some names. NVIDIA's off its all-time highs. Meta Platforms is, but then you look at like Microsoft, and I always construct that one as the value play within the Mag 7 at this point, and that one's underperformed quite a bit. Do you see any value in that one?
Yes, Microsoft is one of our biggest tech holdings. We've had it for a long time, continue to own it. And I think I just highlight a couple comments from the recent earnings call from CEO Satya Nadella. And he talked about that Microsoft's AI spending, whether it's on chips and data centers, is driven by actual customer demand. It isn't, building it. And if you build it, they will come type scenario, or training large language models to train large language models. It's driven by real demand for Azure, real demand for Copilot, for Power Automate, and growing seats. So I think that's an important thing to remember about Microsoft is they are the indispensable software company out there, have just a real dominant position within all of their business lines. And they are putting, AI in action for customers. And that's different than a lot of companies out there. It's a here and now spend.
Yeah, and the investment that they've got into OpenAI, ChatGPT, the monetization comes into play at this point, Christopher, where that's what I think people are looking at, and that's maybe why the stocks pulled back a little bit. It's the actual monetization. So you're telling me Microsoft is better set up across the board than a lot of these other tech players, right?
Yes, I think if you listen to the call and think about all the Fortune 100, 500 companies that are really just starting to deploy those additional Copilot seats as they talked about. Look, no one's out there, necessarily in investor land, we love to talk about AI, but it still takes time for companies to figure out how to implement it, how to use it, how to gain those efficiencies. And when you listen to what the users are saying, once they figure out how to do it, they want more seats, they want more users, and the value add is real. So I think it's just going to take a little bit of time for those seat licenses and fees to really spool up. But I don't think we're going backwards at all.
Yeah, and as far as value plays within the Mag 7, and you start talking about Google, Alphabet, because of the fact that it's got the lowest valuation out of all of them. They're still doing really well on the earnings. A lot of people have been speculating that ChatGPT AI is going to take away a lot of their search business. We haven't seen it play out yet, Christopher. What's your take here on Google Alphabet? Because it's down over 10% from those all-time highs that we saw just 5-6 months ago.
Yeah, at 19 times forward earnings, it's very attractive. We think Alphabet is the most attractive of the Mag 7 right now. I don't think the antitrust scrutiny is going to go away, but I'm not put off by it either. Just like John D. Rockefeller found out with Standard Oil, the parts here are very much worth more than the whole. And that's our base case for Alphabet. We view it as a special situation because of that breakup potential. You look at not only the advertising business, but the strength of Gemini and the growth there, but also YouTube. YouTube is a very underappreciated asset within Alphabet. You've got YouTube TV, YouTube Premium, YouTube Music. They're the #1 streamer, second year of NFL Sunday Ticket, and that's just a phenomenal growth business right right there. And I think, some of the remedies they're talking about to break it up or to sell off Chrome, I mean, those are things that only a lawyer could come up with, and think that selling off a $20 billion business and a $2.1 trillion market cap company is going to have a meaningful impact. Honestly, consumers are still going to choose Google search because of its dominant position. It's a great brand. It's a great franchise. Whether or not it's the default on Apple or you have to select it, people are going to do it. And those payments that Alphabet makes to Apple, they make up a really big part of Apple's services revenues. And honestly, I think it's a bigger threat to Apple's earnings than Alphabet's earnings.
Yeah, Apple valuations at or near records on a historical basis, even though their earnings were mediocre at best. But I mentioned there's been a little bit of bifurcation between maybe the leaders in AI and the chip space with the overall chip market. I mean, there's some names out there. The SMH is down off of its highs, even though the Nasdaq's at its record highs. But then you look at some names, and I noticed in your notes you mentioned Qualcomm. That thing's pulled back pretty significantly. They've got a lot of China exposure. Maybe that's part of the reason, Christopher. But what's your take here on Qualcomm? Is it a diamond in the rough?
I think it really is a diamond in the rough. We've known it for a long time. We're still bullish on the semi space, and they had their earnings report. They had their investor day. The CEO has done a very good job of diversifying the business just away from those wireless chips that they were primarily selling to Apple. And you see them now taking and gaining market share within the automotive space, which is notable because a lot of the competitors are saying that's still a shrinking market. And then you have their Snapdragon chips, which they seem to keep finding new and greater uses for, whether it's in automotive to run the whole computer ecosystem for Mercedes and Li Auto, not just the infotainment and the big screens, but also the assistive technologies. And then you're also seeing Snapdragon powering a lot of the new AI edge-enabled PCs out there. So Qualcomm at 14.6 times forward earnings, very attractive here. You've got a good dividend yield, and I think that's a good business. If you think about the investor day and their recent earnings call, they're doing a very good job of replacing their Huawei earnings over time with the new business lines and things, and I think they're going to be in a solid position. So that's a company we're comfortable owning, and even within our Hudson Explorer model, we're still owners of SMH as well.
Yeah, Qualcomm down nearly 30% from its all-time highs that we saw in June, so it's pulled back pretty significantly. But we've seen a lot of chip names, maybe Qualcomm's in the automotive space, it's in the Internet of Things, it's in smartphones, it's in everything. It's curious to me that it's pulled back significantly so much. So you like that one. ASML has been another one that's been hurt. Got a nice pop yesterday on some news, but is China exposure for ASML the reason that we've seen the pullback there, and that maybe that's an opportunity?
Yeah, I don't think it's necessarily the China exposure because they've had limits on their ability to export the newest and best machines to China for a while now. I think it was really just talking about that bifurcation in chip land between the AI chips and well as the Internet of Things and what we might call the dumber chips out there. And expectations were just really high for this company going into earnings. The AI business is going like gangbusters. The rest of chip land is a little bit slower. But if we think about the direction of travel for all sorts of technology and manufacturing out there, the answer is there are going to be more chips, not less chips over time. And we were very excited by the pullback in ASML to start a position. It was just one of those classic things for us at Hudson Value Partners to buy into a great market-leading franchise business after it's had a little bit of a black eye. And Mr. Market served us that opportunity. We think it's a great, low to mid-teens compounder over time, and we're excited to have the position in portfolios.
Yeah, maybe some opportunities both in Qualcomm and ASML because those things have pulled back pretty sharply. I did notice in your notes, Christopher, and I kind of wanted to expand on this a little bit. Small businesses, maybe there's some opportunities there. A new administration coming in, more business friendly, consumer sentiment data, consumer confidence data starting to move back higher. Is this going to be a bonus because we saw the Russell 2000 small caps hitting all-time highs this past week? Is there more opportunity there?
I think so. Going into the election, small business confidence was at a 13th percentile level, which is extraordinarily low, Tom. And if we look back to the last Trump administration, small business confidence skyrocketed in the wake of that. And what do businesses do when they're more confident? They spend. And I think small businesses are great spenders in Alphabet advertising and Meta advertising. But I think the real sweet spot may actually be in tech hardware and some of those boring names like Dell, HP, Lenovo. The last big upgrade cycle was right in the middle of COVID, and that was 4 or 5 years ago. Those machines are getting old, and that's a very accessible spend for a lot of small businesses to make an investment. Maybe we'll see some more take up of those AI PCs, but I think it's the sweet spot because those are just things that companies can buy. I think the larger pieces of equipment investment that might require financing, that's still going to be a tough market because interest rates for small businesses are still high. But I would keep an eye on tech hardware in the new year.
Especially everybody's been waiting for this upgrade cycle, and a lot of the laptops, PCs, hasn't come to fruition yet, but maybe down the road. All right, great discussion, Christopher. Have a great day.
You too. Thank you, Tom.
All right, that's Christopher P. Davis, partner at Hudson Value Partners, with a few names that he likes.